They're expecting it to pop over 20% this year in 2021, and they think this is one of the best reopening stocks to invest in 2021 and 2022. What is up, guys? Welcome back to my channel. Hope you're having a great day. So let's just get right into it. Start off with Rivian. Rivian is entering very quickly, just charging in headfirst into the electric vehicle market between their SUV and their truck, which are going to be releasing fairly soon. They have big warranties that they are giving customers in terms of they have a 175,000 mile warranty for their battery and for the drivetrain, and they also have a 60,000 mile warranty or 5-year warranty for all other things in the car. They also now are talking about entering the electric vehicle charging space very quickly as well. So Rivian, they say its adventure network will grow to more than 3,500 fast chargers at over 600 sites by 2023. The company says each site will have multiple chargers, be conveniently located on highways, main roads, cafes, shops, places where people are going to be. And this is a big deal because these chargers are going to be fast chargers that are going to allow for 140 miles of range in 20 minutes for their R1T and R1S vehicles, their SUV and pickup truck models. And this is a big deal because when looking at other companies out there, Tesla currently has more fast charging cords in the US than any other company. They have 9,723 fast charging cords in the US. And other networks combined, total combined, have 7,589 outlets. So when looking at that, Rivian having plans to do 3,500 fast chargers in 600 sites, that's going to make them a pretty big player. I get that it's about a year and a half down the road, but that's a big deal, having 3,500 fast chargers. Companies like EVgo don't have that, or EV Box. They are not, they're charging station companies, and they should have way more than Rivian. But Rivian, they said they have plans of growing their network to 3,500 fast chargers. And they also say that over 10K Rivian Waypoints are also planned across the US and Canada through 2023 near retail locations. So the company Rivian, they're not a publicly traded company, but they do already have some major deals in place. They may be going public. We don't know yet. There's been some rumors, some talks about it. But they say that they are currently working with Amazon. They have orders for over 100,000 electric delivery vans. They've already been testing. Amazon's already been testing these vehicles. We know anyone who does business with Amazon, that can open the doors for a lot more production business down the road. Now they're working on their direct consumer products with their SUV and their truck. They say they plan to have production by the end of this year and get to market by mid 2022 and after that. So we'll wait and see what happens here. Charging station companies have seen a pretty big increase in stock price recently. BLNK, ChargePoint, EVgo, EV Box, all these companies are doing well. And now Rivian, which has electric delivery vans, major contract with Amazon. Now they're working on their R1S and R1T, their SUV model, and their pickup truck. And now they're also talking about really growing a charging network with 3,500 fast charging stations. So this company, they're trying, at first I just thought of them as an electric delivery van company, but now they have delivery vans. They're really working on their pickup truck and SUV, and they're even pushing harder into the electric charging station space as well. So it'll be pretty exciting to see how this actually plays out. Next up is Microsoft. So Microsoft, according to Morgan Stanley analyst, says that they could become the Netflix of gaming, and this could cause Microsoft's stock price to absolutely skyrocket. Everyone thinks Microsoft is a huge company already, and they are. But if they're able to really become the Netflix of gaming, there is so much more upside that that could come from it. So right now, they have about 18 million subscribers, monthly paying subscribers for one of their services called Game Pass. And essentially what Game Pass is it allows people to download games onto their Xbox or onto their gaming station. And with this, they have access to over 100 different titles, 100 different games, and they could access all of these games by simply paying a monthly fee. This is important because that's 18 million paying subscribers. Right now, Game Pass is the largest paid gaming subscription platform in terms of, accessing games. It's like a Netflix, exactly like a Netflix, but for games. This is the largest one. And this is important because analysts, they're noting that Microsoft currently has more than 100 million active users for its Xbox Live subscription service, which provides access to online multiplayer features and other offerings. And the important part here is that they believe a lot of these people who are part of Xbox Live subscription service, the over 100 million users, can be and will be eventually converted over to paying subscribers for Game Pass as well. Right now, Game Pass has 18 million, but I think a lot of these people are going to be converted over to paying for Game Pass as well. And they gave Microsoft a price target of right around $290 a share. Currently, Microsoft was at, around the time the article was written, around $240 a share. So this is a pretty significant upside. It's about a 20% upside from where it currently is at. But they're saying that this community that Microsoft is building is really making them like the GameStop, making them the Netflix of gaming. Like GameStop is trying to do this, but they can't, because they don't have the hardware. They don't make an Xbox or a PlayStation. They don't have the hardware, and all of the games and the software people just now can access directly and download directly onto these consoles. And now Microsoft is going to continue to convert more people from using Xbox Live subscription, over 100 million people there, to now having access to Game Pass, which is currently the largest game subscription service out there, which Microsoft does own. And in addition to this, Microsoft is also reportedly in talks with Discord. They're reportedly in talks to buy out Discord, which is a chat app. A lot of YouTubers use it. A lot of streamers use it. A lot of influencers use this platform. You see on TikTok, all these different Discord groups. You see on Twitch and YouTube. Everyone's always talking about Discord groups. And right now, Microsoft is reportedly in talks to buy Discord for more than $10 billion. And such an acquisition would bolster Microsoft's gaming community, and this audience would really translate over well for the company, generating more revenue down the road. So while $10 billion would be their second largest acquisition in the company's history, following only behind LinkedIn, which they purchased for $26.2 billion, this user base that they would get from acquiring Discord would be absolutely huge, and in my opinion could drive the stock price well over $300 a share very, very easily. I think that is a very strong possibility if Game Pass continues to grow and if they're able to acquire Discord, because Discord is a very large platform that hundreds of millions of people use, and they could generate a lot of revenue by having both Game Pass, which is, a subscription gaming company service, and also having Discord, which is where a lot of these people who use these apps, who are on these platforms, communicate. So I think having both of these things would lead to Microsoft being the dominant player in the software for gaming, the Netflix of gaming. They would definitely become the Netflix of gaming, having all of these combined different softwares. Next up is with the semiconductor shortage. What's going on there? So there's been a semiconductor shortage for about the last year and a half, and the CEO of the largest U.S. chip foundry explains why this semiconductor shortage could last through 2022. But this could actually be great news for a lot of these semiconductor stocks. So right now, Taiwan Semiconductors is the largest semiconductor chip company in the world. They have about 54% market share. It's Taiwan-based TSMC. They have about 54% market share. And currently, all of these companies, they know that this shortage is a big issue right now. And they're investing tens of billions of dollars. So TSMC, the largest semiconductor company in the world, investing over $100 billion over the next 3 years to increase capacity, meet demand. Intel, which also designs and manufactures chips, they said that they're going to be investing $20 billion into building capacity in their U.S. chip-making plants. Global Foundries, which is a relatively small player, but their CEO was on CNBC. He said that even though they have a 7% market share, they're going to be spending a lot of money as well to build out their capacity. And right now, this could, negatively affect a lot of car manufacturers out there. So GM, Ford, they can lose billions of dollars of revenue because of this. But the semiconductor companies like TSMC, Intel, Global Foundries, they are going to be doing really well. They're investing a lot of money into building these out, and it's not like a short-term thing where they just are expecting a spike in demand right now, but long-term, no. Like, they need to build out this capacity, because according to the CEO of Global Foundries, he said right now all of their fabs are not only more than 100% utilized, but they're adding capacity as fast as they possibly can, and as soon as they add more capacity, they have to use all of it to meet whatever demand they're getting, because there's way more demand than there is supply right now. And the problem, they explained, isn't building like CPUs, because they building CPUs is easy. But the problem is right now with a lot of auto manufacturers, a lot of these car companies, electric vehicle makers, they need very specific types of chips, ones that have specific functions to them. And that's what is hard about it. So right now, they explain how a lot of these chips are feature-rich chips, and they have specific features to them. So right now, this industry is projected to grow very rapidly over the next couple of years. And Global Foundries, TSMC, Intel, all these companies are going to continue to grow, continue to do very well as a result of this. So this could negatively affect car companies over the next couple of years. They're saying this chip shortage probably will continue to last over the next couple of years, because even though they're building out capacity as fast as they can, like companies like NIO, GM, Ford, they're needing more and more chips because they're building more and more electric vehicles. So it's like, on both sides, demand is increasing, but the factories, and they can't keep up as fast enough with what these companies need right now. And remember, semiconductors and chips are used for all computers, all smartphones, and now they're used in so many parts in the cars. Not just like, there's a lot of parts that use these chips in them now. Speaking of companies that are going to do well, Uber's a top reopening trade. According to analysts, they're expecting it to pop over 20% this year in 2021, and they think this is one of the best reopening stocks to invest in 2021 and 2022 because of a couple of different reasons. But first, the main reason, obviously, is the rollout of the vaccine for the virus. They're saying that with the rollout of the vaccine, it's going to spark a rebound in bookings for the Uber regular service, for the driving and ride-hailing service. They think that is going to increase dramatically. But also, they think that they're projecting that what has happened with their food delivery space with Uber Eats, that is going to continue to provide a significant amount of revenue for the company over the next couple of years. They said previously their flagship business was the ride sharing and, driving people from point A to point B. But that's changed over the pandemic, and now it's really their delivery service that has done extremely, extremely well. Grew over 106% in the second quarter of 2020, grew another 130% in the fourth quarter of 2020. And they're saying that this is their according to their expectations and what analysts are thinking, they believe that Uber's delivery segment, even though now it's larger than their ride-hailing unit, they believe that the delivery portion is going to turn profitable in the fiscal fourth quarter of 2021, and it's going to double by 2022. That's for deliveries. But then they're also projecting that with reopening, people getting vaccines, that now their ride-hailing portion is also going to grow. So they're projecting delivery and like Uber Eats, profitable. Fourth quarter 2021, double in 2022. Then as that's also projected to become profitable, their analysts are projecting that their bookings and their ride-hailing business is going to do extremely, extremely well this year as well. According to studies, they expect to see a 24% increase in bookings for rides in fiscal year 2021 and another 41% growth in 2022, because they said right now, the main thing that is holding people back, according to surveys they've conducted, is that the main thing that's holding most people back from riding is that past rideshare users say they want a vaccine before making a booking. Nearly half of people who used to do Uber and Lyft, they say the reason they don't do it is because they don't have a vaccine right now. A small portion of them say that, a good portion of them say they're going to use it within the next couple of weeks, and a larger portion say within the next couple of months. But the main thing holding people back right now is the vaccine. And as they get the vaccine, they believe that that part of the business is going to explode, while at the same time, their delivery unit is going to continue to grow as well. So they put a price target of about $75 a share, which is about a 40% upside from where it currently is. Say one of the best reopening plays for 2021. And I think Uber will definitely do well this year, especially with their, delivery segment, and also people I've already seen are starting to take Ubers much, much more often. Speaking of the economy reopening, the economy is expected to boom and do extremely well. The stock market, with earnings coming up, is expected to do really well in the second quarter this year. And that is going to propel a lot of stocks, not only recovery stocks, but also tech stocks, a lot higher this year. So the nation's economic growth is really going to be in for a boost in the second quarter this year, as a lot of things start to reopen because of the vaccine rollout and because the states are opening things up more and more. So right now, Americans, almost 95% of Americans are able to get the vaccine or are eligible to get it. Soon, everyone's going to be eligible to have the vaccine. It's going to be able to get it. And it's just going to be a matter of time before everyone is capable of getting it. It doesn't mean everyone's going to choose to take the vaccine, but everyone's going to be able to get it. And now with states reopening activities reopening more activities, people getting vaccinated, retailers, restaurants, hotels, gyms, service-oriented business, travel, all these things are already starting to see a boost. We're seeing more travel bookings. A lot of airlines recorded the highest day of travel in over a year. Uber and Lyft saw more bookings than they've seen in a year as well. So all of these things are starting to reopen. And as that happens, we're going to see airlines do a lot more business. People are going to want to travel, get out. Restaurants, people haven't gone out to eat as much as they used to. All these things are going to experience a massive boom. And combined with all of this, combined with reopening and people wanting to go out, do stuff, there's been trillions of dollars that has been spent in stimulus that has been either sitting in people's bank accounts or is just ready to be spent even more so in the economy. A lot of people use this stimulus to pay bills, but according to estimates, there's still a lot of it that's just sitting in people's bank accounts that's either grown by investing in the stock market, or it's just sitting in their bank accounts and is ready to be spent. And all of this money is going to flood into restaurants, hotels, travel industry, and it's going to skyrocket these stocks. And so while a lot of this has already been factored in for the second quarter, a lot of these stock prices already have factored in that the economy is going to reopen, things are going to do well. But analysts are projecting that a lot of people underestimate how much money is going to be spent for these companies and how much these companies are going to grow over the next couple of months as the vaccine really starts getting rolled out and as summer comes around. They think, especially with travel, I think some of the best plays are going to be like Spirit Airlines. People are going to want to travel to Florida, and Spirit is one of the go-to companies for traveling back and forth to Florida. So I think we're going to see a lot of these stocks really have a great second quarter. And I think people spending stimulus money, more vaccines getting rolled out, I think all of that's going to turn towards companies posting really great second quarter results, and it's going to cause these stock prices to increase even more. The one thing that could hurt stock prices would be interest rates. And if we see interest rates increase, that could definitely hinder stock prices moving forward. But as long as that's kept under control, I think that the stocks and the stock market is setting itself up for a big second quarter, and analysts are projecting the same exact thing between stimulus money, the economy reopening, vaccines being distributed, and it's the time of year starting to get closer to summer where people are going to be traveling more, going out more, and spending more money. Switching gears a bit, the Fed officials, they've been on the fence about adopting a digital US dollar. There's been a lot of talk about China, the digital yuan, what is happening there, that they've already been testing having a digital currency in China. But the Federal Reserve has been doing a lot of research lately on a central bank issued digital currency in the US. Those are known as CBDCs, central bank digital currencies. But key officials are saying that they don't expect any Fed-issued digital dollars anytime soon. They don't expect a digital currency issued by the Fed anytime soon. A lot of other countries in the world are probably going to get this rolled out faster than the US, but they said the fundamental question, the reason why they don't think it's going to happen, is because they don't even know what the goal of doing it is going to be. They don't know what they're trying to do by rolling out a digital currency in the US. They don't see what the point of it is. There are a couple of upsides, like if they ever have to send out more stimulus, it's very easy to send out stimulus if they have some sort of digital currency for issued by the Federal Reserve. That would be one positive. But other than that, they say they don't know exactly why they would do it at this point. One issue is that it would disrupt the banking system. If the Fed allowed users to pay for goods and services using a Fed-issued digital wallet, banks would be competing with the Fed for deposit funding. So essentially, if you could have a digital wallet that was just like a Fed-issued digital wallet, you could store your money there rather than store it in a bank. And then the banks would be competing directly with the Fed, and they don't want that. So Jerome Powell has said in the past that they are open to a two-tiered system where private sector manages the wallet, not the Fed. So they said people wouldn't have a digital wallet that's held that is from the Fed, but it would be with these banks. So that's one option. But right now, it's not something that they are seeing anytime in the short term. Analysts are thinking, within the next late 2020s, it could happen. But other central banks are moving faster. We're seeing European Central Bank already telegraphing the possibility of launching one within $4. Been testing this with certain shops, certain consumers in the country. So we'll see what happens. US, though, seems like it's going to be not a country that's going to do that anytime soon. They'll probably do it well after China, well after Europe, and we'll see what happens. But according to Bank of America Securities, they say that they believe they'll become more widespread in the mid to late 2020s, not really anytime soon. Next up is Bitcoin. Bitcoin has dropped a lot in volatility, and JPMorgan, they're saying that Bitcoin, the drop in volatility has actually boosted its appeal to institutional investors and makes a $130 price target very possible for Bitcoin. They don't say this is going to happen this year, but they're saying this is a long-term price target of $130,000 per coin if the volatility of Bitcoin continues to decline. We're not seeing massive swings in the price as much anymore as what we used to see. And according to JPMorgan, they're saying that Bitcoin is becoming much more appealing to institutions seeking low correlation assets that diversify portfolios. They're saying it's not correlated as much to the stock market, to gold. It's really uncorrelated to a lot of other assets out there. And they're believing that for that reason, and with the volatility decreasing of Bitcoin, it's very likely that we're going to see it reach $130,000 per coin. The U.S. Investment Bank noted that high volatility in the past has acted as like a headwind, has really made it harder for institutions to adopt Bitcoin because they don't like having that massive volatility. But signs of Bitcoin's volatility dropping and diminishing has made it a lot more attractive to institutions. We've seen Cathie Wood, ARK Invest, they've come out and say that they think Bitcoin can reach $500,000 per coin if institutions allocate single digits of their balance sheet. So if they allocate like 2 to 5% of their, like between 2 and 10%, let's say, of their balance sheet to Bitcoin, we could easily see it reach $500,000 per coin. Still though, right now, Bitcoin is pretty volatile. Like Bitcoin in the last couple months has realized 86%. Compared to 16% for gold. So it's much more volatile than gold still, but the volatility has been decreasing. So we'll see what happens there, but interesting to see how JPMorgan, basically they put a price target of $130,000 for Bitcoin, which would be about a little more than 2x what it is currently at. Moving on, Bitcoin price surge recently has been driving up the interest, really increasing interest for China's digital yuan, according to the central bank. And essentially what's been happening is China, they put a lot of restrictions on Bitcoin mining, anything related to cryptocurrencies in general. And as a result of this, they've come out with their own digital currency called China's digital yuan. And that's essentially an example of a central bank digital currency, a CBDC. And this aims to replace some of the cash in circulation. So rather than, let's say, the government issuing like physical dollars, they can issue just some digital yuan. And speaking to analysts, they're saying that right now, one of the many reasons why people are getting more and more interested in this is, first of all, because of the increase in price in Bitcoin. A lot of people have been looking towards digital currencies. That's one of the main reasons. Another reason, though, they're saying is that another reason why people are really looking for this is because people are believing that this makes it much easier to make transactions. So what the government has done in China is they've been testing this already. They've been testing this a lot recently, and they've been doing a lot of digital yuan pilots. So far, they've not given a timeline for the nationwide rollout, but some pilots have taken place where they've handed out about $1.5 million in Beijing. Other major cities across the country have also had their own trials where people get the digital yuan. They could spend it at select retailers, select locations, and they're seeing how that works, how people actually like it. People have been wanting this for a while now. The demand for the digital yuan has gone up quite significantly. More and more people are wanting it, and I think we could probably see this very, very shortly be released nationwide. We don't have a timeline yet, but I wouldn't be surprised if we see it starting to roll out within the next year, like 12 months from now, 12 to 18 months. I think we definitely could see it starting to be rolled out because they already do have pilots going on. This has been something that they've been talking about for a while now. Interest has been driven up because Bitcoin's price has been going up, so people have been just searching, digital coins, digital assets, things like that. So as long as Bitcoin, I think because Bitcoin is looks like it's going to continue to do well. I think we'll continue to see the demand and interest in the digital yuan continue to be there over the next couple of months, and I think we will see it rolled out. And finally, Republican Senator Roy Blunt, he called for Biden to slash the massive $2 trillion infrastructure bill that he's proposed down to $615 billion. So that's about 30% of what the total bill was. And he explained. So Republican Senator Roy Blunt of Missouri, he explained how this bill should be focused more on just infrastructure. Make it like solely an infrastructure package. Roads, bridges, airports, maybe underground water systems and things like that. Maybe even broadband. But he says that only makes up about 30% of the $2 trillion that Biden has proposed. And that would make it a $615 billion bill. So the problem right now is that in order for this to pass, there's going to need to be more support on both sides, Republicans and Democrats. There's going to need to be more support. And for Joe Biden's $2 trillion bill, there isn't as much support out there on the Republican side for this bill, and even a lot of Democrats. So by reducing the total price tag of the bill, cutting out a lot of other aspects of it, they're making it more of just a strictly an infrastructure bill, and he believes that this could help get it passed. This could help Joe Biden have more bipartisan support for the bill, and this could help get it passed. Right now, Senator Mitch McConnell, he said last week that $2 trillion package would not receive Republican support. He said he vowed to oppose it. He would not pass it. And they don't think that many other Republicans do the same thing. So this proposal by Senator Roy Blunt, who is a Republican, he thinks that this could be a way that they could come to an agreement, cut off a lot of money that was in this bill. One problem is, though, is that Joe Biden has really been looking at spending hundreds of billions of dollars on electric vehicles, net zero carbon emissions, the electric grid. And not all of this money would be included. So Roy Blunt said, I think you can do that. They would need to have some innovative things like looking at how they're going to deal with electric vehicles, use of highway system, what they can do with public-private partnerships, and it also had some tax cuts in it that would increase the corporate tax rate. That would be cut out. So there's some big things that would be cut out. Joe Biden has really been pushing for electric vehicles, the electric grid, things like that. Not all of that money would be included in this bill. We don't have specific details of what Republican Roy Blunt would want with this. We just know that he thinks they could cut out about $1.3 trillion of the $2 trillion bill, make it closer to $615 billion. And I'll go into more details when everything is released, when we know the specific details of what he is proposing. But right now, they're saying long-term, it's important that they get infrastructure. It's going to be key for spurring job growth as the country recovers. They need to make sure they get money for roads, bridges, airports, just infrastructure. And the way they can do that is cut the bill down pretty significantly, make sure it gets passed, make sure to get that money out there. So I'll keep you updated on what this new bill would look like, but this is only talks right now, and we'll have to wait and see if it actually, if Joe Biden, if Democrats would want to do this. So I'll make sure to keep you guys updated, but that's all I got for you guys today. Hope you guys enjoyed this longer sort of episode. I really enjoyed doing them. If you made this far in the episode, comment down below car emoji. Just random car emoji, like the red car emoji. But I hope you enjoyed. Don't forget, you can get 4 free stocks valued up to $1,600 when you download the Webull investing app using the link down below. Hope you enjoyed, and I'll see you guys in the next episode.